Hi, it's Nero here from Investment Rise, and if you're watching this video, the question on your lips is, what will COVID-19 do to our property markets? What will the impact be? Well, let me be upfront right now and say that I don't think anyone really has any real clue about what the coronavirus will do and the impact it will be. We are in totally unprecedented times, uncharted waters, as it were. So in these uncertain times, one of the things I always do is I go back to the fundamentals. So primarily right now, the crisis is a health crisis. Okay. Now, of course, there have been some massive financial impact due to the fact that there's been large job losses. The government is spending money to try to keep the economy afloat during these tougher times. There's been incentives given to tenants. And so the question is, well, with all these changes, well, what's going to happen to the property market? And I think the answer is that the impact will be different depending on which suburbs you're looking at. Why do I say that? Well, because a lot of the job losses have been isolated to certain key industries like tourism and hospitality, to name a couple. Obviously, the fitness industry with a lot of gyms closing as well is another industry that's been really impacted. So if you are looking to buy an investment property in a market where a lot of the people living in that suburb, they're working in those kinds of industries, then that suburb could take a hit. However, on the flip side, if you're working, or rather you're looking to buy property in an area where people have more secure employment, expect those areas to do quite well. So overall, I think in the short term, so I would say over the next several months at least, I expect there will be a blip in the property market. But here's my tip. Do not look at the data, and especially stay away from the news headlines. Why do I say that? Because as a result of COVID-19, one of the key things that's happening right now is that the number of property transactions is reducing. Okay? So therefore, what that means is the number of data points is also reducing. Okay? So more and more what we're seeing is that it's either desperate sellers having to sell, unfortunately, and so what you can see is that there are opportunities for a bargain. If you're a savvy buyer and you are secure in your employment and you've got the financial capacity to take action right now, there are deals to be had, absolutely. However, as a result of those types of transactions being the majority of transactions, majority of real estate properties rather being sold, you're going to see that certain suburbs are going to all of a sudden show this huge decline. All right. But it's because rather than, I'm going to make these numbers up, but rather than say maybe 100 transactions a month in this particular area, you might now only be seeing 50 or less. And a lot of those will be, as I said, desperate sellers. So don't get put off by the fact that a lot of the data that you're going to see is going to show prices falling. You've got to always remember that a lot of the data that will be showed is being based off smaller number of data points, which means it's nowhere near as accurate. Okay, so yes, you will see that happen in many areas. I think as well what you'll see is that the blip will be short term. All right, once the economy gets back on its feet, once we get through this coronavirus crisis, and we definitely will, it's not a matter of if, it's only a matter of when and what the impact will be. I do believe on the other side of this, we will see one of the greatest property booms we have ever seen. Now, why do I say that? I mean, prices in Sydney and Melbourne, they're already high. Okay, so why would I say this? Here's why. For the first time, the Reserve Bank of Australia has announced that it will be doing a quantitative easing program. Now, in layman's terms, what does that mean? It means that as a result of the quantitative easing or QE program, banks will have a lot more money to lend. Okay, and so how do banks make money? They make money by lending. And remember, a lot of banks are right now offering many people with a home loan the opportunity to freeze their loan for a certain amount of time. So banks are taking a hit right now. Yes, banks are strong, banks are coming to the party, and that's why you're not going to see as many people have to sell their property because they can't afford the mortgage, because in many cases they will be allowed to freeze their mortgage for a number of months. So banks are doing their bit. Yes, the skeptical people may say they're going to make more money at the end of it. Sure, but at least in the short term, they're coming to the party, and they're going to prevent the number of fire sales that you would have otherwise seen. However, it also means that banks are not making as much money over the next few months. And so what's that going to do? They're going to want to, once all this crisis is behind us, they're going to want to increase their revenue, of course. And banks make revenue by lending more money. And so I expect that with the Reserve Bank of Australia having the interest rate now at 0.25% and indicated that they will not go any lower, what you'll see, however, is that the retail banks will lower their interest rates to make it easier for people to borrow. They will reduce their lending constraints even further to make it easier for people to borrow. And so when there's more liquidity in the market, when it's easier for people to borrow money, that money now is circulating in the economy. Where's it going to go? It will go in Australia, certainly into property, maybe even into the share market, but that's uncertain. But certainly into property, because the underlying fundamentals are still the same. Australia, if we take away the crisis right now, people still want somewhere to live. People still want to invest in property. There's actually greater demand in many areas than supply. So yes, I expect there will be a huge boom, but again, it will not be across the board. And so this is where, if you're looking to invest, you need to really look at suburb selection. So if you're looking at Sydney, don't just think that because you may not be able to afford it, say an A-grade suburb, that you should just buy in a cheaper suburb in Sydney, thinking that it's all Sydney and all Sydney's going to go up. That's not going to be the case at all. You will see some suburbs of Sydney really struggle, while others will continue upwards and have a huge increase. Okay, and I think especially in Sydney and Melbourne, counterintuitively, the suburbs that will do really well are the suburbs that are already priced above the median price point in Sydney. All right, because generally speaking, the people who live in those suburbs are currently working in industries that are quite secure from an employment perspective, whether it's health or whether it's finance. And so those suburbs will do quite well. Perhaps some of the suburbs that are a little bit cheaper in Sydney and Melbourne, where there is more exposure to the hospitality industries or tourism industries, those suburbs will struggle a bit more. So that's just a general rule of thumb, but I think if you apply that, you're going to really sort of stay clear of making an expensive mistake. Okay, so yes, I believe that in the short term, it's going to look ugly when you look at news headlines if you're looking at data, but you've just got to remember that the number of data points is actually far less because of the fact that there are fewer open homes. In fact, there are no open homes right now. Everything's online. There are no more auctions in Sydney and Melbourne, at least in the traditional sense. Yes, there's a move to online, but it's just not the same. Okay. Plus, at the moment, there are a lot of sellers pulling out of the market, not buyers, but sellers, because they don't believe that they can get the price that they want. They're not sure if they sell their home, well, how are they going to buy another home? So there are actually fewer properties on the market as well. All right. So yes, short-term blip in the market, but medium to longer term, I think you're going to see a huge bull run. So as an investor, what would my recommendation be? If you're someone who feels secure in your employment right now and you are ready to make the move, and your horizon, your time frame is 3 years or longer, which I would say it should be because property investing is a long-term game, then there are opportunities to be had now and over the next few months. Okay, so yes, however, if you're someone who's maybe not so secure or uncertain about work, hold off, watch the market, but gear up as best you can. I know that's hard to say if you're struggling financially due to everything that's happening right now, but expect that there will be a huge property boom coming, especially I would say in some of the upmarket suburbs of Sydney and Melbourne. I think Canberra will do really well because it's a lot of obviously government jobs which are quite secure. I think that the Brisbane market will also do very well because a lot of the areas are based around health, where there's huge investment happening right now. I think areas to avoid would be like Tasmania, because they've, as you know, right now they've closed their borders, and Hobart especially is dependent a lot on interstate tourism, which is essentially zero. So they will go through a downturn in the market. The dark horse, I guess, is going to be Western Australia. It's been struggling for so many years. But because there's going to be a lot of demand now for natural resources, does the Western Australian market come back? I think it's a speculative play. I think it's a 50-50. But if you've got a higher risk tolerance, you might want to look at that. As I said, it is speculative. We don't know what's going to happen, but I think it's got its best chance as a result of COVID-19 to rise once again because of the increased dependence on our natural resources. So it's going to be a very different kind of a market to invest in post COVID-19. You really need to understand the fundamentals. Yes, there is uncertainty, but for those people who are willing to do their research, apply some patience, apply a longer term time frame, you will do very well. I expect that, say, within 2 to 3 years from where we are right now, prices will be significantly higher. There'll be a significant upturn in prices, and we would have almost forgotten the impact of, at least from a financial perspective, of what COVID-19 did to the country as a whole. So no, we're not going to see a crash and then prices go flat for a long time and nothing happening. Even though, yes, I think there is a recession coming. Yes. However, I believe it's not a recession generated because of uncertainty in the financial markets. It's a recession generated because of the health impact, and then the financial markets are being impacted by that. So the fundamentals are very different here. So I think that medium to longer term, prices are going to do very well in the property market because there's going to be so much money out there from banks. And if you can get your hands on it, and then if you can do your research strategically to find the safer markets. And what's a safe property market at the moment? Number one, don't look at markets or cities. Look at suburbs. Consider suburbs. Consider who's living in the area. What's the employment rate like there? What's the vacancy factor like there? Look at the core fundamentals, and there are going to certainly be opportunities to be had for the strategic investor. If you're a speculative investor, I think it's a very high risk play right now. I said maybe the Western Australian market might have some opportunities there, but it's a real wait and see. It's not something that, as someone who advocates low risk investing, I would advocate. But I think, yes, the suburb priced above the median price point in Sydney and Melbourne. If you can afford that, we'll have some opportunities. Yes, certain areas around the Brisbane market. Yes, Canberra as well. There'll be a safer place. The speculative market, as I said, is Perth. Some of the regional towns may also come online and have a rise in income and rise in prices rather, but it just depends on how our employment status changes. And here's what I mean by that. If after COVID-19, many companies agree to allow more people to work remotely, then I think you'll see people say, well, I don't need to live close to work anymore. I can go out further. And then I think some of the satellite cities, say around Sydney or around Melbourne, will really start to see an upturn because prices will be cheaper. People can move there, but still sort of be employed in the city of Sydney or Melbourne, for example. Okay, so again, a speculative play right now. We just don't know how that's going to play out, but it's something that I would keep your eye on because there may be some great opportunities there. So no, it's not all doom and gloom. Yes, long term, I think the news will be good as a result of quantitative easing, but we just need to get through this period of uncertainty. So as someone right now looking to invest, do your research, make sure you're looking at all the things that we've discussed here, and then make sure that you are able, if you can, to get into the market when that next boom comes, or that you're already well positioned, even if you get in now knowing that you can handle this short-term rocky ride, because I do believe that we're in for a great run with property prices as a result of the quantitative easing program we've had. Hope this video helps.